Okay, so I'm going to talk about opening range breakout and how to trade the opening range breakout. So there are a few key things here that you got to follow if you want to profitably trade the opening range breakout. So some of the key things is first, know your setup. I'm assuming that there is a setup that you already have your go-to setup, have your go-to setup, and just essentially a supplement to catch this opening range breakout at the right time. And the second one is when you do dive into the setup of yours, when you're anticipating the breakout, what you're going to do for opening range breakout, second step is you're going to set the range. And finally, the third one is your entry level, where of having the moves of this opening range breakout. All right. So the first one is knowing your setup. So whether you trade any type of setup, whether it's a high type flag or the cup and handle and whatever else, generally more often than not, any breakout movement is predicated by a tight day on a previous day. So for example, if you're looking at this LIN, this is the daily setup. This is the previous day. So the previous day is always a tight day. It's a volatility contraction. And then followed by a breakout. With DS, a tight day. And the open and the close is tight. Don't worry about the wick because the wick just shows just the different movements within the day, and it could have been just anything, but in the end, it contracted. Same thing with PRI. Open close, it's a tight day. This one's a tight day as well. So a lot of movement for breakout is often, not always, is often predicated by a tight day. We can keep looking at it again. IRTC, again, breakout, but previously it was predicated by a tight day. This one's actually an inside day. It wasn't really a breakout, because candle sort of engulfed the following candle. Tight day and a breakout. So you can see this is a tight day and a breakout. So you can see that a lot of movement when it comes to breakout is often predicated by a tight day. So knowing your setup and knowing that breakouts are often predicated by a tight day, it gives a higher probability. That's your step one. And your number two is you gotta set the range. And the way that I set the range is I'm using 10-minute chart here for a candle. So again, on Friday, it was February 24th, that day. Here's the open. Here's the prior day. You can see this is 4 p.m. prior day. And then this is the following morning. It opened lower, and then it started moving. So what you want to do is let the candle form during that first 10 minutes. So once the 10-minute candle gets formed over here, what you're going to do is you're going to draw where the opening range is. And the range is essentially the opening candle high and opening candle low. So for this example, opening candle high is right here, and then opening candle low is down here. Right. So 326.72, 322.63. And then you kind of just let it kind of form on its own. Here's a battle going on between the buyers and sellers, right? It all starts moving, then it kind of starts moving above the VWAP, and before you know it, it broke out of your opening range. So there's the opening range breakout. So say that you do enter during this breakout somewhere when it's moving up. Let's say you enter over here at 321, and the day at 5% higher. Now you may not be as lucky or catch it right then. It might have run by the end of it. So you catch it at the next candle opening over here. And it's still at 3.48% run. So this is the power of the opening range breakout. Let's look at another example of DDS. So once again, this is prior day, and this is the opening range, 10 minutes. You want to do the 10-minute candle. So then you kind of set your opening range over here up the high, and then opening range up the low. And then you kind of just let it battle. And then once it breaks out, you break out over here. You might have caught it somewhere in the middle. But if you would have gone to the other day, this would have been a 3.53% move. Again, if you catch it at the next candle, if you weren't watching it, you might have gone to back or whatever, you still would have caught it at 2.48%. So that's the move when it comes to the opening range breakout. Now, how do you make sure? Now we go into the third step. The third step is how do you make sure you get the entry when it's supposed to? Well, I say supposed to kind of loosely because there's no supposed to way of doing this. But let's say that you want to drop it down to here. So with Lin, if you've seen my prior videos before, some of the charts that I like, or some of the indicators that I like, is the 9 EMA and the VWAP, because when it crosses, it sort of forms a powerful move, and it sort of indicates some momentum going into it. So I go into EMA 9 and the VWAP. I have it down even to the lower time, 2 minutes. So when I'm on my 2-minute time frame here, and you can see again, this is going 2-minute time frame, so we're going to the closer look. So the day open here, the opening range has been set from the prior when we did the 10 minutes. So there's the opening range. And then we kind of zoom in over here, and this is again battle of 5 or 6 hours. 9 EM and VWAP weren't as clear here as far as like the clear direction of where it was going to go, because they're both just on top of each other. So you kind of don't know. You would be guessing in this at any time that you enter around during this volatility contraction. It's essentially gambling because you don't know which way it's going to go. But then you start sensing the move over here, and it starts expanding away from the VWAP. So the 9 EMA starts expanding away, and then if again this is the entry here, this would have been phenomenal entry right at the 9 EMA, and let's look at the 2-minute time frame. Once again, we set the opening range down here from the 10-minute time frame. We drop down the 2-minute time frame next, and we start looking at the 9 EMA and the VWAP, and the crossover happened. Well, crossover happened here, and then had you entered at this candle, nice day. So that's how you enter the opening range breakout. Now we go over to the breakdown now, and then again we follow the same exact setup. So first one is know your setup. Know that any breakdown is predicated also by a tight day. So if there's a tight day before the breakdown, is likely going to be expanded a little higher. Not always, but often. And the second one is set your opening range using the 10-minute candle. And then the third one is your entry. You want to enter at the point at the lower time frame so you can catch it at the right time. So let's go to the breakdown. Let's look at the daily first to show that it is often predicated by a type day. So let's look at MGL, or even it wasn't really a tight day. I would focus on that setup. EQIX, a tight day prior. I like that, and even the 2 days before was moving down, so it creates a weak structure because there tends to be more sellers, and then a tight day, and then the following day likely there would be no buyers, so it'd be a lot of sellers. Like the setup a whole lot. So let's see what it's like on the opening range breakdown this time. So we drop down to the 10-minute time frame. February 24th. Here's the previous day, and here's the opening candle here at the 10-minute time frame. So the opening candle, we mark the high, and then we mark the low. And sure enough, you can kind of see what's going on here, and the following candle for the next 10 minutes also broke down even lower. And after that, it kept going down. But let's say that we set our opening range over here, then we drop down to the 2-minute time frame now to make sure that we catch it at the right time. So here's the opening over here, and we set it up here. The cross actually happens here at the again, the second opening range. The cross happens here at the time frame that happens essentially within 10 minutes of the opening. So the cross essentially happens here of the VWAP and the 9 EMA. So you want to start looking at entry over here. Let's say that you enter here at the 699.15, or even lower than that, 698.57. You still have yourself assuming that you take it the day. So pardon me. So you would have been entering here. Opening range breakdown. Today is a 2% move, especially on a $600 stock. That's a phenomenal day. Let's look at another one for the breakdown again. Getting started by a tight day prior. WAT. Again, this looks like a nice waterfall and a tight day. And then sure enough, there's a break there. So 10-minute time frame. Here's your opening candle. This is prior day close. Here's your open candle over here. So you start marking it at the opening range. That's your opening range. It's a wide opening range over here. Then you drop down to the 2-minute time frame. So the cross actually happened early, not even after the 10-minute time frame form, but it sort of contracted over. So this is where the 10 minutes time frame sort of closed. But man, had you even entered here at this candle right here, you would have had yourself a nice day. That's a negative. That's a 1% day on your move. Let's say you went to let's say you can go down to the lowest level. That's again just a little 2% move. So you can see kind of the power of this opening range breakout / breakdown if one does it correctly, to let the first 10-minute candle form and set your opening range there, and you drop down to the lower time frame and use an indicator. For me, I use 9 EMA and VWAP. Then you can find a good entry point and just let the stock ride, and you can peel along the way. You can set a stop loss, and usually the stop loss would be great. This opening range over here also serves as a good stop loss. So for example, again, if you enter here, I personally, at this early entry moment, I would set my stop loss at the high of day if I short it. But then as it moves down, I move my stop loss to the next entry. So that's essentially how you would play the opening range breakout / breakdown. Hope this helps. And again, do your research, find your edge, know your setup that you like to trade. Know that a good opening range breakout and breakdown essentially is predicated by a tight day. And have yourself a day. All right. Thank you so much.